Hey guys, UGFX here. I'm going to tell you why trying to predict the daily bias is the biggest mistake traders are making right now, why it's total BS, and I will give you my system to get the right bias 75% of the time, backed by data. If you don't know who I am, if it's your first time here, I've been trading for 5 years. I started at 14, I documented my whole journey, I scaled to 7 figures of private investor capital, and I'm trading an objective mechanical strategy, blah blah blah. Okay, let's go directly into that. I'm going to give you as much value as possible. The first point is the problem with the daily bias. So most of people think that if they get the daily bias right, it's going to be the big solution to the problem and they're going to have a very, very good win rate. It's not working like this. I'm going to explain you why it's a complete BS, the daily bias, okay? And then I will put you to my solution. So what is the problem with the daily bias? The thing is that you start your trading day and you want to predict the market bias. And just this, wanting to predict something in trading is a problem. Because if you come into trading in this frame of view and you're constantly trying to predict things, the probability of you being profitable is very, very, very tiny. Okay, you don't want to predict, you want to react to what the market gives you. You want to have the information and then react toward that information. Because trying to predict on these markets with a lot of liquidity, with a lot of actors is like so hard. Okay, this is what they do. This is what the guys in the banks do with all of the information, with all the algorithms, etc. They predict the market. They try to predict a little bit of the market. Okay, but they have a lot of money. They have software that costs thousands and thousands. Okay, you don't have that, and you come to the market and you try to predict the daily bias. It's just total randomness. Okay, based on like random technical context, not data backed up, you try to predict the market. It's like flipping a coin. Okay, it's like 50-50. When you try to set a daily bias, it's like 50-50. You look at all your ICT thing and you're like, okay, I see this FVG here, so the market's probably going to trade here and then come back here, and I think my prediction will be that price will do this. Okay, so you're trying to predict the price and you don't want to do that. So what's the solution of that? Because even the guys with much more money, software and team don't try to predict, okay, the daily bias, like completely 100% of the daily bias. They don't try to do it. Even the guys that got a full team of analysts, a full team of researchers, they will not try to predict that, and you try to predict that. So you need to expand your view, and this is the solution. You need to expand your view frame. You need to set a weekly bias and not a daily bias. But why? Because setting a weekly bias will be less prone to market cyclical nature, okay? Because the cycle of the market will constantly change. How the market behave will constantly change, okay? If you create a system to define the daily bias and you try to back it up with data, which is something good, can be a good idea, it will not work long term because it's something very little. Like you're trying to define something on a very little time frame on just today, okay, and trying to create a system based on that. But the market cyclical nature will just wipe it all out, okay? It will just come over it and wipe it, okay? And your system will just work like 1 month, 2 months, and then it will not work anymore, okay? That's why we go through a weekly bias, okay? We set a bias for the week, and once we have our bias for the week, we act upon this bias by executing with another little system, trying to just get the trades, trying to get your breaker block, your order block, trying to get you 2 risk reward ratio, your 3 risk reward ratio. Okay, that's what we do. But first, we set the weekly bias. Okay, why? Because it's less prone to market cyclical nature. Because it's easier to define. Okay, it's easier to be right on the weekly bias than to be right on the daily bias, because for me it's quite random on the daily bias, and then you can systemize it and you can process it and back it up with data, and that's what I'm going to show you. Because if you just say okay, I'm going to set a weekly bias, you will not necessarily have a good win rate on this weekly bias. Like you will not be able to predict it consistently. Okay, so you need to create a process around it that you just follow, a step-by-step process, and when you go through this process, the probability of you having the right weekly bias is like 60 to 70% of the time you get it right. And if you get it right 60 to 70% of the time, and if you have a process to do it, you can be profitable. Like you can build literally a big successful career on that. So the next point is building this. Make it a process, step by step. What you see here are the tools, okay? All the process you see, this is a process to follow, a step-by-step process, and this process is underpinned by tools, by shiny object, by ICT, FVGI, laws, support and resistance indicators. Those are the tools, okay? But what is the most important thing? It's the process, okay? And so you need to have a clear process, and then you can underpin this process with tools. What people do is that they try always to look for the best tools, for the best FVG, for the best technical analysis process, for the best strategy, etc., etc. And they keep searching, and they're still not profitable after years and years. And they just focus solely on that, and they never build a process. Because first you need to build this process, and once the process has been built, based on your specific market, so EU, for example, here, I build a process to get the weekly bias right 60 to 70% of the time, and then I add the tools. Then I add the ICT FVG, the IN lows, the BSL, the sell side liquidity, the liquidity sweep, the SMT, all these things. I add them after. First, I create a process, then I add the tools. Okay, so what is the process here? We want to identify a confirmed trend, identify a clear mitigation level. We want to set a valid target / invalidation. And then once all of that is done, we wait for the mitigation level to be touched. Okay, so what it looks like is like, we want price to make a trend. Okay, here we have a trend. We see a clear trend. That's good. Then we want to identify a clear mitigation level. Let's say here, very clear mitigation level. Okay, and then we want to set a target. Okay, let's say this is a target. Okay. Let me just move this, boom. And then what we want to do is set an invalidation. Okay, the moment this point is reached, then it's not valid anymore, and we switch scenarios, okay, and we stop trading, okay. Invalidation, so invalidation, target, mitigation. Okay, now what we do, we wait for the mitigation level to be touched, okay, and once the mitigation level is touched, then we can start to trade towards the target, and then we execute buys towards the target. But before, during all this moment here, while price is coming toward the mitigation, we do nothing. We just wait, we sit on our hands. And that's how I'm being able to be this profitable and having this high of a win rate, because I'm just able to sit on my hands during very, very long time. I can wait, like if you go check my Telegram, the link is in description, and you can see that like I can wait 1 full month. Okay, I literally can wait 1 full month without executing any trades, because I know that if I wait like this, I will have the highest probability trade, and I will be able to make money, and I will not lose money, and my mind will be clear when I will be executing, etc. So that's why I'm waiting, okay? So yeah, we just want to wait for the mitigation level to be touched. A little bonus here is how to back this up with data. So what we want to do basically is backtest this process. You want to have data on it that is at least 2 years long, then you refine the data, you refine, backtest until you have 2 years of data, and you set a goals. For example, you set a goal of having the right weekly bias 60 to 70% of the time, and once you reach this level, you stop refining and you have a process that works. Okay, here are my statistics. For example, I get the weekly bias right from 62 to 71% of the time, okay, using my system. So yeah, that's the interesting things. Now we need to add a weekly preparation process. So a process that we will follow each time we go through this process, and it allows us to define an invalidation, define the target, and define a mitigation. Okay, so this is the process we add. You need to add a weekly preparation process. And now we're going to dive into what people find interesting, the shiny object, the tools, the how we identify it with specific tools, and we are going to dive into charts. Okay, so yeah, now what tools do we use? And this is our toolbox. So we have a process. Okay, let's go down. We have a solution, we have a process for this solution, and now this process is underpinned by tool, and we need specific tools. So here are the tools that we're going to use to validate this same process. And this depends on you and on your market understanding. I'm going to give you my tools, which are ICT, FVG, ILOWS, SMT, IFVG, etc. But it can be RSI, it can be pivot points, it can be basic support and resistance. And that's what people don't understand. They think the solution to the problem is here. Okay, they think it's here, or it's here, okay? But it's not. The solution is here, is having a process. And once you have a process, you can underpin it with whatever tool you want. as long as it helps you validate this process. If basic support and resistance helps you get a mitigation level, a valid target slash invalidation level, and a mitigation level, and helps you identify a confirmed trend, then it's good. Then you don't need something else, okay? Like people always are always running for the shiny objects, for the what is the best indicator, what is the best ICT strategy, what is the best model. Bro, we don't care, okay? You need to build a process, and then based on this process, you put the tools. But the tools are like 30%, okay? Of the process 70%, the tools is 30%. And here I'm just talking about strategy, okay? Then you have psychology, then you have everything. But just about strategy, it's 70% process, 30% tools. Okay, and then we need to frame the tool in a specific way. Okay, so we have the process, we have the tools, and then how do we frame the tools? What we're looking for on the chart: mitigation level, target level, invalidation level, and a clear trend. Okay, I don't know why it's not written here, but a clear trend. So now we're going to dive into the charts to look at how we frame these to get your weekly bias right. So I gave you a process, and what I gave you seems so easy to follow, but this makes me profitable. Just this little process, identifying this. But what I'm not giving you here is identifying a confirmed trend, identifying a clear mitigation level, identifying, setting a valid target invalidation, etc. All those things, confirmed, clear, valid. Those you need to define it by yourself. What is a confirmed trend for you? So I know exactly what is a confirmed trend for me. So I can sit on my hands during months because I know that for the moment, there is no confirmed trend, so I will not trade. And that's how I filter all the losses. And I have 70% of my months that are winning on a year. Same thing, clear mitigation level. I know exactly what is a clear mitigation level, and I've defined that. So if there is a clear trend but no clear mitigation level, I'm not trading. And by going through this process, by filtering price like this, I can get first the weekly bias right 75% of the time, and I can filter all my trades and get a win rate that is really high, and make easily 3 to 10% per month and be consistent during years and years. Okay, so now let's dive into the charts, and I'm going to show you how to frame the tools and just define your weekly bias. So we are on EU here, okay, on the daily, and what I do basically is that I have specific time frames that I'm looking for, so which are daily, weekly, monthly. Okay, I'm trying to just look at these time frames, and what we're trying to do here is define the bias for the week ahead. Okay, so here, for example, I have no clear trends, so I'm doing nothing. I have a uptrend and price retracing down, going into this FVG here. Okay, but for the moment, I have no confirmation that this FVG will have a reaction to the upside, and price since 11 days is just going down. Okay, so what I'm going to do is wait for price to give a clear confirmation of whether he wants to go down or up. And once I have this confirmation, I can start to frame my tools. Okay. This is a very clear confirmation, for example. Why? Because we have this trend, we have this retracement, and then price go into this FVG, does not react, go into this FVG here, reacts, okay, break the structure here, go upward. So now I have a confirmation that we have a clear established trend. Okay, so what I'm going to do is that I'm going to go through my exact process, which is first defining a trend. Okay, defining a trend. Okay, so it needs to have an established trend. Established trend, yes. Now what we want is a clear mitigation level in this trend. Okay, and then what we want to have is clear target invalidation. And then we want to wait for the mitigation. Okay, now what we want is a clear mitigation level. We don't have yet. Why? Because I'm looking at clear mitigation level in weekly, monthly, daily. Okay, if I go in weekly, I have no fair value gap at the moment. Same in monthly, and in daily, I have nothing that is created. Okay, now I have a fair value gap here. Okay, so this is my first level that I'm looking at. First level I'm looking at, and I want price to retrace inside this, and then I will look into any trades. Okay, so boom. I have a clear mitigation level. Now that I have a clear mitigation level, I need to have a clear target and a clear invalidation. What I do most of the time for my invalidation, I take here, for example, the low. I will not take the first low, I will take the second low. So the first low is here. Where is the second low? Boom, boom, boom. The second low is here. So this is my invalidation. invalidation level. If we go down there and we break this level, then I'm not bullish anymore. Okay, then I'm not looking for a clear mitigation level in bullish anymore. Okay, that's what I'm doing. Okay, now that I have a clear invalidation, I want a clear target. Okay, what can I target? I just look left here. I have this that has been taken out, this that has been taken out. I have this high here, so I can say this is my next draw on liquidity. Okay, this is my next draw on liquidity, so I'm just looking for price to go inside this. As you can see, guys, I'm not overcomplicating this. Okay, because trading is not about overcomplicating. My analysis is very, very simple, and most of the time you will not be impressed by my analysis because it's not complex, and that's what makes me profitable. I have a very clear process and tools that are not complex, and if you take both of these together and then you had psychology, data process to recalls, data recalling process, and mechanical LCF strategy, etc. If you add all of this to a very strict process with simple tools, the probability of you being profitable will be very high. Okay, and that's what I'm doing. It's very simple. Okay, so now I have my clear mitigation level, I have my clear invalidation, I have my clear target. Okay, what I do, I wait for mitigation. I don't care of what's happening in 4 or in 1 hour, in 5 minutes, of all of the all of the news, of all of the noise of the market, of all of the traders that post trades. I don't care. I just wait for my mitigation level to be touched, and I do nothing. And I'm happy with sitting on my hands, because I know that looking at my data, if I sit on my hands during these moments, I make a shit ton of money. So I just sit on my hands, okay? And I just wait. One day, okay, so Monday here, Tuesday, Wednesday, okay, and boom, Thursday, we dive into this, and you see here, open is here, okay, open is here, boom, 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 we go down, and we close here. Okay, so we can expect next day to go up, and we can try to take a trade even on Thursday or on Friday, looking for buys. Okay, and what we do next week, Monday, we look for buys directly, look for buys. Okay, boom, then we continue. And what I want to do here is just add up to this position. Okay, add up. So I took one position here, okay, and now I just want a new mitigation level, and new mitigation level is here, and when price will come back, I will just add up. Okay, add up until target is hit, and once target is hit, boom, I made a shit ton of money by being patient. Okay, what I do is I'm just trying to look for A to B movement. So from A here, let me take my pen, from A to B movement. Okay, so this A to B, which is my target, A mitigation to B my target. So I'm just looking for A to B movement from my mitigation to my target. Okay, that's what I'm doing. It's not very complex, to be honest, guys, what I'm teaching you here. It's not like some new things, okay, but like, yeah, very simple. Very simple A to B movement. Okay, boom, 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 boom. So now what I'm doing, again, I'm looking for a clear mitigation level. Okay, so I just take this, and this is my next clear mitigation level. Okay, because it's defined as a clear mitigation level. So I want price to go into this, and then I will take a trade. Boom, price priced into it. Thursday, continuation of the movement, and we can look to buy again. Boom, buying, going straight into it. And boom, we reach the target. And now that the target has been reached, if we still have running positions from here, we can close the position. And we have entered here in intraday trading, same here intraday trading, and this is another system of trading. Okay, we enter with another system. But yeah, that's my HTF system from a very high level. Okay, a very high level point of view. Okay, that's how I execute everything. I just look at clear mitigation level, first established trend, then clear mitigation level, then clear target invalidation, and then I just add up to the position, add up until we reach the target, close everything, take all the money out, and then I'm out of the market. Okay, step by step, just adding up whenever we have a mitigation. And same, when price has touched at the mitigation level here, I can enter here, I can enter here. Okay, because we have the momentum of price just touching this level, so we can build trade based on this momentum of price just touching this level. Okay, so I take trade here, I take a trade here until we touch the level, and then I'm out. Okay, So yeah, very simple, guys. So that's it for the video, guys. If you're struggling to get profitable and you can't figure out how to get funded or make any profits, then we might be able to help you. You don't have to click the first link in the description, but if you do, there will be a video of me telling you how I help traders solve the same problem. Don't worry, there is no free course, there is no webinar or trading signals, okay? I don't want you to feel obliged to click it, but feel free to. And basically, I only work with traders on a selective basis because I'm looking for disciplined individuals. So that's all for the video. If you like the video, there's a button for that. Be sure to press it if you did. Comment any video idea or request you have, and subscribe if you want more content that keeps you engaged to the end. Have a blessed day ahead. Thanks so much for watching. I wish you all the best and take profits only.